It's December, it's actually almost Christmas right now. And hello everyone, Alex is here. I hope you're doing well, I hope you're staying safe and positive. We're almost in 2022. And it's again that time of the year where the snow starts to come and also where we are looking at what actually happened in 2021 and what actually waits us in the next year. And the most important thing is that how we can financially prepare ourselves to the best of our abilities to reconsider decisions we made this year and make it better for the next year. Let's see what we actually can do and where to look. And I want to make this video as simple as possible because people don't want to look and listen for lectures or how to handle your finances, because everybody knows how to do it. I just want to share my experience, what I do, and how I plan my finances. And maybe there's something you want to use as well. And the most important thing is to do whenever the year comes to the end and you're planning ahead for the next year is to do the financial audit of your personal finance. And financial audit actually has 5 different sections for me. First is emergency fund. Do I have enough in my emergency fund? Do I need to reconsider my emergency fund because something changed in my situation? Am I renting something bigger, or I bought a house, I have a bigger mortgage or not? Or expenses lowered and I have less things that I need to worry about, right? So that's first. The second piece is insurance coverage. I know insurance is probably a scam and people don't want to pay this insurance actually until the insurable event comes in. So you need to consider all different situations where things can go wrong or some bad events might happen and stuff like that. Are you covered for those or not? So think about that. Third piece is actually that people don't want to talk about is estate planning. Do you have a will for yourself in case of some unforeseen situations might happen, right? This is a very important topic people don't want to actually look at, but it's actually very important and you have to have it ready for anything happens. Fourth piece is also very important is debt. Are you in debt? Do you have a high interest debt? Do you have a plan to how to pay off that high interest debt or not? So this is very important. This is the first thing probably you're gonna want to tackle before even starting investing on your own, because high interest debt is actually basically investing in reverse, because you are paying this 20% interest per year to banks or insurance companies or whatnot. So the important thing to consider here is that put yourself on the right track, create a plan on how to pay off this debt and make it as fast as possible. The fifth thing is just simple math, calculating your net worth. So why it's important? Because you want to make sure you're on track for your longer term goals. Are you on track for your retirement? Is your net worth is actually in line with the people of the same age in the country? Are you above or below? You probably want to be above because you don't want to be an average person, but you don't know about that until you actually do the math and calculate that. Do that every single year so you can see you're improving every single year as well. So that's for financial audit. The next piece is actually very important. We are sort of moving slowly to the investing part, and the first piece is gonna be tax shelter account. So there are 2 primary tax shelter accounts that probably everyone has access to and most of the people are using is TFSA and RSP. So for TFSA, why it's important to look at it at the end of the year, because you are actually have this opportunity to withdraw from your TFSA, and on January 1st all these contributions is going to be recovered so you can actually recontribute back whatever you withdrew last year. If you do that somewhere in the beginning of the year, then you need to wait until the end of the year for January 1st to come in before you have an option to recontribute back, right? Where if you do it closer to the end of the year, then you have to wait a couple of weeks only, and then you're ready, you can actually put your money back on your TFSA and keep going. So that's one piece. And then you also need to look at what's actually changed with the limit on TFSA for next year. So far we're on track. We're doing the same limit for next year as we had this year. It's a $6,000 limit for your TFSA contribution per year. So that's what you're gonna be doing for next year as well. And make sure TFSA stays on top of your investments, as this is tax-free account. So you don't pay taxes on whatever you earn with that account. The next one is RSP, is Registered Retirement Savings Plan. So what this is all about is basically you are earning money tax-free, sort of tax-free, because this is just deferred until you actually retire and start using that money, which is gonna be taxed at the level of your tax bracket at the time when you retire, right? So usually when retirement comes, then your tax bracket is actually lower than what you have today. Why? Because people don't work so much, or they don't actually work at all. So they don't have this regular income coming into their pockets, and that's why their tax bracket is actually lower. That's why whenever you withdraw from RSP during your retirement age, then you're going to be paying less taxes because your tax bracket is lower. Why it's important to look at RSP at the end of the year? Because you have the time to contribute to your RSP until February 28th, right? For the previous year. So whenever you apply for taxes, you can actually get tax refund for the money you contributed to your RSP account. It's not very critical to look at it right now, but it's also a very good idea to calculate what's left in your room for this year to actually contribute and make some contributions, fill it up to the best of your abilities until February 28th. So that's what about tax shelter accounts. Moving on. So the next piece is going to be very important and probably one of the most exciting ones, because we're going to be talking about our investments, our stocks, ETFs, everything we put our money and earn money back. So audit your investment portfolio. So basically it's very easy to forget about your investments. You have these regular contributions every week, every month, and you're buying the stocks and ETFs on a regular basis, and you just forget about those. And you're actually hoping that things is gonna be well. And it's mostly gonna be like this if you're investing through mutual funds, where someone else actually do all the work for you. But if you're a self-directed investor like myself, where you're using a self-directed brokerage account like Questrade or Wealthsimple Trade and all that, and you're managing your investments yourself, then it's a good idea to actually at least once a year to look at it for things to consider, reconsider, change, update, or completely redo your portfolio. There are a couple things, important things you need to look at whenever you're looking at your portfolio at the end of the year. The first one is rebalancing. What it means is that whatever you decided on to be your diversification and plan for your investments, make sure stays the same, you're on track, and you are not a lot into stocks or ETFs or one sector or another, right? Make sure you're on track with your plan, and if there's any dips in some of the sectors, you gotta change something up if you decide to do that. The second point is very important as well, is your risk tolerance. Pretty much what it means is that your life goes on, right? And then things are changing. You're having a kid, you're buying a house, you're moving to another place, or you're starting school, or you're finishing school, you changed your job. All these life events can affect your risk. Or the most important actually one is that, are you getting closer and closer to retirement age? Or are your investments are actually at the point where you can retire very soon? So this is all where the risk comes in, right? You need to make sure that your investments are actually lined up for the course of your long-term or now maybe short-term plan for your retirement, which comes in next year in 5, 10, 15 years. It depends, everyone has a different situation. And reconsider your investments, reconsider your risks, and maybe there's a need to change something up. The third point is a very interesting one. It's not maybe applicable for a lot of people, but maybe some would find it useful. It's tax loss harvesting. Basically what it means is that you secure your losses and you make up for your gains, right? So you don't pay taxes for the gains that you made because you also had some losses. So sometimes it makes sense to do it, sometimes it doesn't. So it's totally up to you what's happening. This is mainly applicable for non-registered accounts, so accounts that actually have taxes associated with them. If this is something you're interested in and you're doing that, I'm gonna put a link below in the description if you wanna know more about it. The other thing to consider here is that if you're using some robo-advisor actually brokerage account like Wealthsimple, for example, then they are doing all the rebalancing for you. So you don't have to think about it at all. But if you're a self-directed investor like myself and you're managing things on your own, then you gotta look at it. And is it important to look at it? Probably yes, most likely yes. You shouldn't be predicting the market. You should be very well diversified with your investments in order to succeed on a long-term vision. The final part for your investment is actually you need to assess if your income actually changed and you can maybe contribute more than you were contributing last year. And do you need to change something out with your regular contributions because you are, behind on your goals? So do that. Or maybe you're on track, or you want to retire early and then you want to increase your regular contributions. So this is a good time to look at all of this together and, just line up your investments, line up your personal finances ahead. So the next year is going to be better than the previous one. And to close it off, the last piece I want to say is that make sure you are actually diversifying not only your investments, but also your income. Make sure you're not only relying on your 9-to-5 job, but you also have some, side hustles, or maybe you're doing some side business or anything like that. Or maybe you're a dividend investor and you actually want to get some passive income from your dividends, which is going to become your income source in the future as well. So that's also a very important point. And also make sure you look at your expenses, of course, and lower them down to the point where you're actually satisfied and you can invest and contribute to your future you as much as possible today, because time on the market always beats time in the market. So that's all about it, and I hope you enjoyed it. Tell me in the comments what are your big plans for next year, what actually you're going to be doing at the end of this year in terms of your personal finances and all that. Happy to hear, happy to chat there. And I'll see you around. All the best out there. Cheers, bye.